traders, welcome to the TMT stock market strategy video for Friday, April 29th, last day of the trading month. Should be interesting. We did have markets actually reacted to the Bank of Japan not doing anything, staying put, which was pretty much logical for the moment. Markets sold off and rallied right on the opening. We had a lot of shorts that were short into the pre-market session in Europe, and we rallied straight up. I want to show this to you on the 5-minute chart. You can see this here. Rallied straight up, went sideways into lunch, and then sold right back down again with not one pullback, meaning a back test or any type of bear flag to get involved in this area. Now, me personally, there was just so many things wrong with this long trade yesterday, and you could see that really we broke out of a 15-minute range. We had a slight little pullback, and then we went higher. I personally don't like to get involved in any of this because when something's not right, when in doubt, stay out, and that's exactly what I like to do. Stay out of trouble. This here, you could see, is just really consolidation at the upper end of the range. This was the move yesterday. However, again, you know, when you have like this, a bear flag or another bear flag, that's your cue to get involved here, not straight down when you have no entry. Okay, you're just closing your eyes to get short. That's not trading. Okay, that's gambling. So just keep that in mind. I had a few emails. Hey, would you have gotten short? Whatever. No, I would have loved to get short, but the problem is that when you just get a waterfall sell-off like this, you're not going to be able to really get in, or at least get in appropriately, the right way to get into a trade. Okay. But nonetheless, we did go up and then we sold off again. So the markets are very interesting, right? We have sentiment extremes in the S&P and of course the dollar, which the dollar is actually selling off basically on the Bank of Japan, which is propping up commodities yet again. So we have commodity inflation across the board. We have a massive bubble going on in crude oil. I mean that in the short term, guys. I mean like where we've come so far from the end of January to now, a massive squeeze up into these areas where gold at the moment, heavily long traded gold. Don't get involved in gold at the moment. Let it come back in. Let it shake out the week longs. I do suspect and still believe that that's going to happen. And it could happen in 3-4 days. Gold could be down $100. So be very careful if you're looking to buy gold. I've had some emails about that. I'm looking to stay away, looking to buy gold at least $100 cheaper than where it is today. And if it runs, so be it. But I'm looking to actually short gold as it starts to roll over again. And crude oil, I do believe it's just about done. More importantly, I'm looking at the XOP, which is the exploration oil and gas. And if I get the chart up, you could see where has it come this far, this fast. And it's just basically straight up. And again, going off of crude oil, a lot of these companies are still not making money or actually doing really poorly in this ETF. So take a look at the top 10. You'll see a bunch of them: the Devon Energy, Southwest Energy, Range Resources, Marathon Oil, APC, COG, HES actually reported poor numbers. So it's starting to move much lower. You can see here from this big move higher. So use caution. Pick a couple of good stocks in there, guys. Great opportunity to possibly look for shorts, but you have to stalk them. Okay, they may not be ready yet. They might go up one more time. But keep an eye on that sector as well as I am. All right, I want to just run real quickly and show you what's going on here. We're going to have we have the average true range here right around 18. So when the markets are this low in the average true range, we will get a pickup in volatility. And as you can see, every time we had low volatility, markets had a waterfall sell-off. And you can see that here, same thing here. And is it going to happen here? We're going to have revision to the mean, guys. It's only a matter of what day and when it's going to happen. Okay, may not happen today because it is Friday, but I do suspect volatility to pick up and the markets to sell off. And I've been saying that for the last several weeks. I do believe the bigger move is to the downside, not to the upside. Okay, now let's take a look at the VIX. And another reason why I wanted to show you the volatility expansion is the VXX. I like to trade the VXX. VIX is also good for technical analysis. But you can see here we're at the lows, at the bottom. I showed this to you I think a couple of days ago. I am looking for a bigger move to the upside. I'm actually looking for a breakout, small pullback, and then a real big explosion. and that may occur next week. But keep an eye on that VXX, a good trader, nice, easy trader to trade. All right, but I am looking for a breakout out of this. The first tag would be that 20-day moving average. Excuse me. All right, so let's go look at the indexes. Big area of resistance, big area of supply. We talked about this. I don't believe that even if the market were to break out a little bit, that would be a phenomenal shorting opportunity. With longs being here, longs trapped from November, December, the only other way is actually down. At least now, and we can get some sort of a pullback. You can't just go up 9 straight weeks, guys, without some sort of a decent pullback. Yes, we have consolidated all of April here. April was a very poor trading month, unless you're doing special situations. But if you're indexing, it's very poor. You can see we did absolutely nothing here. We went sideways and one day up and then another sideways for the rest of April. So April has not been a great month. Very quiet as far as the indexing is concerned. Transports here, looking for a rollover back to at least the 200. UPS reported earnings yesterday. Their guidance was poor. So I do believe that the transports will start to roll back over, helping the bearish case, at least in the short term. I do believe that the markets, the economy is doing pretty well, and I do believe that the markets are poised for another leg higher, but not before we get a decent sell-off. Remember, guys, the markets are made to fool the masses. We want the markets, we want to follow what the markets are doing. We're trend traders. Follow the trend. Trend is your friend. However, you can't be blind about what's going on here, that you're up straight, 9 weeks straight up without a decent pullback. And as I showed you on the 5-minute chart, volatility, risk off, happens extremely fast. And I bet you there was a ton of long traders that were looking to go long, that were holding long from the morning, got all stopped out by the end of the day because it happens fast. And as you can see, there was absolutely no pullback. Okay, IWM, same thing. You could see here, doing better obviously than it has, but a lot of supply. Again, a lot of overhead resistance up in these areas. And it's going to take a lot of work for the IWM to actually start to break out, chop around a little bit, maybe create some sort of a sideways consolidation channel, and then break out, all right? But until then, you have to be suspect of this rally. And I told you this, I've been saying this for the last couple of weeks. Diamonds, uptrend channel, you want to call it bearish rising wedge. We did break that lower trend line. One day doesn't make a trend. I like to see 2 closes below it, any type of trend break, and then reevaluate it. Okay. And lastly is the Qs. Qs have been divergent from the S&P and the other indexes I just showed you, big time, and I mean big time. We have negative divergence from Qs versus any other index, and it is breaking down. It is one of our leaders. Okay. We have the transports, we have the Russell 2000, and then we have the NASDAQ as our 3 big leaders of the 5 that we follow. Now, NASDAQ here, heavily tech-weighted, biotech-weighted, is breaking down hard, okay? If this starts to really start to break down, I do believe it will definitely put another feather in the bear camp, and I will believe that this will take the rest of the markets down with it. So let's pay attention to what's going on in the Qs and the components in the Qs, and that'll give you some good idea about where the next move will be. And again, I do believe the next bigger move will be down and not up. Today's the walkaway trade. Remember Friday, a lot of these fund managers, they already put their bets in. But the market, that what happened yesterday, the movement that we had yesterday could solidify another move lower instead of higher, okay? And we have inflows coming in. Mutual fund inflows are beginning to come in yesterday, today, and a couple of days going into next week. So that could buoy and prop the market up and subdue any type of selling for the moment until next week, okay? So just keep that in mind. Have a great weekend, everybody, and we'll speak to you next week. Take care.